Hi, I'm Patrick Tuttle, the real estate guy with Coldwell Banker Heritage and Legacy Management Services with your market update for the residential real estate market in El Paso, Texas and the surrounding areas. And I'll be right back with the report. And I'm back. So we always start off with our market report on the resale homes. And this is our beautiful little graph that Jess has put together. And what you're going to see here, if you go all the way over to the left-hand side, well, on your side it's the right-hand side, we're starting to see the gap between the green line and the red line. The green line is the available homes, and the red line is the sold homes. We're starting to see that expand a little bit because our resale market is starting to cool off some, and the inventory levels are climbing as the interest rates are climbing. Now, specifically, pending contracts are down 16% year over year, from 541 to 450. Sales are down not much, just 0.4% year over year, from 694 to 691 this year. And months of inventory is down 1.5%. We're sitting at about 1.26 months of inventory, and as the time goes through the summer, we're going to see that months of inventory increase because that's just a normal thing that happens in a post-pandemic world. We're going to go back to what it was before, and our inventory is going to expand. We'll probably get into the 4 months by the time we get into January. Now, my crystal ball is a little fuzzy on that, so if I'm wrong, it's just because my polish isn't working on the crystal ball. Now, price per square foot, look at this. From $115.23 last year to $139.16 this year. That is your average price per square foot on a resale home, and that's 20% increase year over year. And our days on market is 38 compared to 37 last year. In the lower price ranges, we still have a shortage of homes, and that's why our days on market is still very, very low. I can remember a couple of years ago when we were in the 4 months of inventory, we'd be looking at 75 to 100 days on market easily because people were taking longer to make a decision because they had more choices. When you have fewer choices, they make that decision quicker. They may be in a bidding war. It just depends on what the situation is and their price range. But right now, 38 days on market. But it's starting to shift. We're seeing that pendulum go from the top end, and it's starting to shift down. But it's still a seller's market in most of the price ranges here in the El Paso area. Now, on to our new homes report. We're also seeing the same thing with regard to our red line on the closings to our green line. Not quite a hockey stick over there, maybe a lazy player where he's got it down a little bit, but it's starting to increase some where we're getting more and more inventory with the new homes. That is going to create a challenge with the new home buyer. They still have some issues with the supply chain, but the new home buyer is getting more and more choices. They're starting to cool off. One builder I spoke with earlier today said that they are seeing contracts drop because of the interest rates going up, and the buyers are no longer qualifying for what they had under contract, so they're having to let people out of the contracts. So, what specifically? Pending contracts down 48% year over year. This past week, the past 7 days, as of today, July 19th, 2022, we saw a 42.8% fallout rate. That means that 42% of the contracts that went under contract in the last 7 days fell out. That's showing up right here with these builder contracts. Sales are down 24.5% year over year. Months of inventory is up almost 40%, 39.6% there. And the price per square foot is up 20%, 19.8. Really, that's the same thing that we're seeing over on the resale side. And the days on market, 144 compared to 160 last year. That's because the supply chain is getting better and the builders are able to deliver the homes. So, what are our 3 key takeaways this week? Well, first off, unit sales of resale homes are on decline. They're also on decline on the new homes, and that's because the interest rates are going up, contracts are falling out, and the buyers have more choices, and they're starting to cool off and say, let me think about this a little bit. That will probably continue throughout the end of the year because we typically will see a downhill slide all the way through December, and then January and February usually don't have any stellar numbers for us to look at least in a post-pandemic world is what we're looking at. Number two, prices are starting to level off. It's still a seller's market, so if you're not getting a decrease or getting it at list price, it's probably because you're in a bidding war with somebody, but the prices are starting to level off a little bit. And three, interest rates are in the high 5s to low 6s. That's going to depend on what your credit scores are, and the Fed is still going to meet next week and decide whether or not to add another 3/4 of a point to the overnight lending rate. Even though it doesn't directly hit our interest rates for mortgages, it's likely to cause another increase in mortgage rates for the next quarter. So, those are our 3 key takeaways, and that is our market overview for June 2022. And if you've got questions about this or how we can serve you here at Coldwell Banker Heritage or Legacy Management Services, we'd love to do so. You can reach us here at the office at 915-585-7777 or on my cell, Patrick at, wait a minute, hang on, my cell is 915-588-1850. Email address is patrick.tuttle@coldwellbanker.com. Thanks for watching. God bless you, and make it a great day. Bye-bye.